Today's topic, we are going to talk about how to save money, 53 clever ways to save money into your pockets. So before I go further, I'm going to start with what percentages of your money should you save. Like in most financial experts, recommended saving is 15% of your income for retirement. Or to be an effective saver, you should also consider setting aside money for other things such as emergency funds or large purchases. As a general rule of thumb, it is a good idea to save at least 20% of your income in total. So what's the best way to start budgeting? To start budgeting, you consider tracking your spending for 30 days, and that you will give a baseline and help you identify areas where you overspend, and you should cut costs. It will also ensure you that you are realistic with your budget. And once you know what your spending looks like, and then you decide what kind of budget is right for you. You can make a detailed budget that specifies exactly where every dollar or kwacha goes. You could also take a more relaxed approach with a budgeting app that can help do the heavy lifting for you, or a 50, 30, and 20 budget. That could mean saving 20% of your income, keeping fixed costs for necessities to 50% of income, and reserve 30% for discretionary spending. And then we are looking at this. What is the 30-day rule for saving money? So saving money in 30 days, the 30-day rule for saving money involves committing to wait and consider major purchases for 30 days before pulling the trigger. You need to decide what amount of money constitutes a major purchase subjected to 30 days rule. So these this law designed to help you cut down on impulse spending, cut down on your spending, which is usually easy due to online shopping, and to make sure you are researching large purchases carefully. Carefully. So as following the 30-day rule, following a 30-day rule could potentially help you save by reducing unnecessary spending. So how can you save 1,000 fast? So there are two ways to save 1,000 fast. Number one is increasing your income and drastically cutting spending. If you take on a temporary side hustle, you can potentially save all of the monies you earn from it. You might also decide to slash all non-essential spending. For example, give up dining out, trying to eat what is in your pantry without buying groceries, reduce trips in your vehicle, save on gas, and avoid spending on entertainment. So the bottom line here, guys, is that don't try to tackle all these tips for how to manage your money at once. Instead, choose the ones that requires the least effort, and you will have the greatest impact to start. If you don't want an emergency fund, that's good place to start. It will improve your financial resilience to have the extra cash on hand. So from there, make a small change to your savings habits each week, or more significant change every month to work towards your financial goals. After a while, these are habits that won't feel like extra work. They will become a part of your lifestyle. Making a progress towards your savings goals means greater financial security for your future. So it can also means having the ability to treat yourself every once in a while you work toward a stocked emergency fund and the retirement account. Be sure to also set aside some of extra monies for goals that are a little more funny. Follow these money saving simple steps and watch your savings. So this video, guys, is all about the savings, about financing, on how to manage your monies and how to save for a long term. So work on your credit score. A low credit score can cost you hundreds or thousands of dollars or kwacha per year in interest. So insurance premiums and more. Maintaining excellent credits will also help you save. So number 2, create an emergency fund. You should also have at least 3 to 6 months worth of living expenses saved in an emergency fund. This will help you weather financial setbacks or job loss. So start a retirement account and pay into it each month. The financial experts are recommended that you save 50% of your pre-tax salary per year. Include employers' contributions in order to retire comfortably. That you have to save 15 years in order to retire comfortably. Whether you have an employer or sponsored retirement account or IRA, making regular contributions could help you meet your long-term goals. So build your budget. That's this one is something that you can learn from in this video. Don't skip this video, finish it to the end and hear me or listen to what I'm saying. So build a budget and stick to it. So if you subtract your bills from your post tax income and allocate the rest of your money into different spending categories, you will ensure you have enough to set aside into savings each month. So set a savings goals. Establish short-term and long-term goals. Can help you create a roadmap for saving. So automatic your direct deposits. So you are putting money into savings without even thinking about it. So yeah, putting the money into a separate account without thinking about it. That's what I'm trying to say. So number 6 one is separate your savings. So to avoid borrowing from emergency funds when you want to treat yourself, set up a separate savings account for large planned purchases like vacations. So the number 7, refinance your mortgage. So refinancing your current mortgage could help you achieve a low interest rate or reduce your monthly payment. So number 8, make a plan to pay down your debts. So whether you are trying to pay off student loan debts or credit card debts, or the right approach can help you get there. So use a sufficient strategy such as the debit avalanche method, or take advantage of a balance transfer credit card offer. The quicker you can pay off your debts, the lesser you pay in interest. So what percentage of your monies should you save? So we talked about it when I started this video about the percentages. So the most financial experts recommend saving 50% of your income for retirement. So be an effective saver. You should also consider setting aside money for each thing, such as an emergency fund or large purchases, as a general rule of thumbs. So it's a good idea to save at least 20% of your income in total. So what's the best way to start saving? These are the questions that people ask in daily lives, like same as when am I going to die? Death is part of our lives and it's unavoidable. Only God knows the time, the hour, and where the death goes. So let's talk about the percentages. Let's forget about death. Yeah, so like I said earlier on, how to save without much effort. So automatic your savings. So you must choose to set up an emergency deposit into a funds account or retirement account. You might use an app called Digit, which analyzes your bills and spending habits to determine how much to safely set aside for you. So Digit will automatically help you save more, and you won't have to take any steps to change your lifestyle. So how to save money on credit card interest? So like I said earlier, you need to set up an automatic payments. So if you ensure to make all your credit card payments on time, you avoid a penalty, or just be sure you have the money into your budget to make the payment. Negotiate the lower rate. So if you're struggling to pay your bills, try to negotiate the lower interest rate with your creditor. They might have the might agree to a temporary adjustments if you can show hard work. If you have been a long-term customer who has never defaulted, so these people, they want to help you out. So guys, without wasting much of your time, and I'm happy that you've listened to whatever advice I've given you about the finance, about how to save your money financially, how to achieve your goals and everything. According to this video, don't forget to comment in the comment section down below. Hit the thumbs up, like this video, subscribe to this video.
Always be my baby way. You will always be my baby way.
You will always be my baby name. You will always be the love of my life in name. The future.
Tony Bridge upon the mix. Run that through, boy. Let them know that you're ranting.